Thank you guys so much for tuning into today's live stream. Today is March 20th, 2025. And to begin today's live stream, I did want to take a look at the economic calendar for today. So here, today we had unemployment claims. We have not much, right? We only have unemployment claims coming up today. So that is something, I guess, that would have brought in volatility coming into today. Here, let's do, I'm gonna change this. Give me 1 second. Central time. So yeah, coming into today, we had unemployment claims. It went up 2K here compared to the previous. Forecasted was 224. However, the actual one is 223. I mean, unemployment is rising, but it's less than forecasted. So not too, I guess not bad, but not good. But going into the actual charts here coming into today. So yesterday we had created this pretty bullish candle, right? It's bullish daily candle, and the easiest assumption here to make is that we're most likely going to take out the daily high. However, we do need the intraday time frames, like this 4 hour, the 6 hour, the 8 hour, the 10 hour, to be aligned with this order flow here. So I actually want to see us take out previous day high. However, if the intraday time frames aren't suggesting that, then I can't force the daily high to be the draw of liquidity, right? It's what I'm favoring towards. However, if, like I said, if these time frames, like the 6 hour, the 8 hour, isn't necessarily in support of higher prices, then I can't do anything to force higher prices, right? And so coming into this morning, I just kind of, I'll be a little bit patient, not really trying to force anything here. And I do want to see if we have changed. Let me see here. I'll ask ChatGPT because I don't know if I have to change my chart settings here. Let's see. So March 20th, or March 21st is okay, so expiration date, we have one more day left. So tomorrow will be the rollover here. Alright, that's interesting. So coming into today, I wanted to see us take out previous day high, but if these candles right here, if the intraday time frames aren't suggesting that, then I'm not going to really force anything onto the markets. And it does seem as if my weekly analysis here is playing out. So like I said, I wanted to, on the weekly time frame, I wanted to see us take out previous week's low, right? Because of the way that we closed here, we created this weekly fair value gap. However, because we closed below the second fair value gap's candle's low here, so this is the second candle here, right? This one, and this is its low. And notice how the closing price of the previous week's candle here, so, and this is the closing price here, and notice how we closed below the I guess the low, right? Notice how the purple line is below the green line. This suggests to me that we're most likely going to treat this inefficiency here on the weekly time frame, this weekly CIBI, as a breakaway gap, meaning a breakaway gap is essentially a gap that it shouldn't get rebalanced, right? I don't want to see prices trade up into here. So coming into this week, I wanted to see us continue lower or possibly consolidate. So here, NQ, weekly objective is previous week's low, or we could consolidate. And I created this during Sunday afternoon. So just pay attention to that, right? If we do end up consolidating, we could treat this inefficiency as a gap that gets rebalanced. But yeah, coming into this morning, I'm going to be a little bit more loose. My bias isn't like confirmed, you know. I do want to see us close here on the 4-hour candle and the 8-hour candle, and depending on how we close on this 8-hour candle and this 4-hour candle will tell me if we're going to continue higher or continue lower. So I would like to be a little bit more patient here, not force anything, and wait until this 4-hour candle closes and this 8-hour candle closes for a bias. So yeah, that basically wraps it up for what my projections are for today. I mean, we still have the closure of the 4-hour candle and the 8-hour candle for a morning objective, but as of right now, we still have 17 minutes left until we officially open. So I don't know why I am. It's like my nose is really. It's very runny. Yesterday I did end up purchasing some shares of some mutual funds, and I did buy, I believe it was Amazon, Nvidia, Tesla, and actually we'll see here. I did end up buying partial shares of those stocks. So let's see. So it was AMD, it was Amazon, it was Nvidia, it was Tesla. So I have 4 shares, or I guess 4 partial shares of those companies. Jeez. So my share price I could end up just buying more shares of those companies, to be honest, too. But we'll see. Let's see. So let's going back to the charts here. I do want to point out that there is a dealing range here at this swing high. So from this swing high here to this swing low, there is a dealing range. And within a dealing range, there is discount level and there is premium. Notice how price is just wicked up into the premium of this dealing range. So this blue line right here, if you guys can see it, that one right there, it overlaps with my purple line. But that essentially is equilibrium. Equilibrium separates discount and premium. So anywhere above that blue line, anywhere within this red box here, would be considered premium, right? And anything below that equilibrium price level would be considered discount. So right now, we have already traded back into the premium of this dealing range, which is something that I was kind of looking if we might have an opportunity to long into premium, but turns out we just took it out. So going to be a little bit more nimble, more patient. Not exactly, I'm not going to try to force anything. I'll just, sit on the sidelines if needed and just wait. But yeah, so there is a dealing range within that swing high, right? So this swing high, there's a dealing range. However, there's another one. So dealing ranges are a fractal, right? There's, it's just something that's, it's a characteristic of the markets. And so from the larger, I guess, dealing range, there is this specific premium level, right? Right here. So notice how we haven't traded up into the premium of this specific dealing ranges yet. So coming into the morning, this could be an objective, right? If we do close bullish here on the hourly time frame, I would, favor prices taking out previous, not previous, but premium, right? I would like to see us trade up into the premium level here. If we can create a bullish closure here on the hourly candle, that's something that I would like to see as well. So I'll keep that denotation here on the charts and to allow you guys to see what I'm kind of, I guess visualizing. Let's see here. So we do not have SMTs here between this low. There is SMT, however, at previous day low, or not previous day low, but previous day high. So previous day high here on NQ, we failed to take out Monday's high of day, whereas ES, we did end up taking out Monday's high of day, and its high of the week here on ES is actually here on Wednesday. So there is an SMT at the highs. Just something that you just do want to pay attention to. Here on, so there's SMT here as well, between NQ and ES. NQ, we did take out the PM session's low yesterday, whereas ES, we did not take out the PM's low. Just something that you do want to just take a look at. 10 more minutes until we close here on the 4-hour candle. So just, you can be a little bit more patient. No need to force anything. let's see. So I bought AMD. Let's see. So AMD, Amazon, and Nvidia. So I do want to put that onto my do AMD. Let's do Amazon. So I'm not too sure what my share price is. I don't know where I exactly bought it. Can't exactly see where I bought. So I bought it at 106 on AMD, trading at 107. Nvidia, I bought it at 118. It's at 118. Tesla, I bought at 233. So let's see here. Amazon. I don't want to be on the 15-minute chart here, but we are you could consider this relatively low here. So we did have this retracement. I'm buying around here, so that's something. Let's take a look on the 1 month time frame. 12 month. So its highs are 242, right? And I mean we can still see a lot of upside here in Amazon. I don't see us trading back down to like $1. It's a really large company, so that's something. Let's see, AMD. Yeah, we have a lot of upside here on AMD as well. So AMD, I was filled at 106. Its high is at 227. Let's take a look at Nvidia. Nvidia, it's trading at 118. Its highs are at 153. Yeah, this pullback here during like COVID would have been the perfect like price to buy at, to be honest, right? That would have been a really good choice to buy. Tesla here. I know Tesla's selling off a decent amount, but I still like to see Tesla's Tesla. It's really strong. I would consider buying more if we can get into this blue box. But yeah, I just leave it where it's at right now. All right, let's see. So I have my money spread out here now. I'm starting to really be a little bit more nimble with my money. So I want to say nimble, but like I'm starting to diversify it. Have it in some of my money in high yields, have some in stocks, I have some in mutual funds. What I'm considering is actually buying bonds and like CDs, because that'll give you like a quick, it's money that I'm not going to use right within a year, so why not have it work for me? Alright, so let's go back to the futures markets, and let's take a look at the 1 hour time frame. Alright, so we do have that closure here in about 4 minutes or so. So I do want to see how we close here on this 15-minute time frame. If we close below this purple line here on NQ, on this next 15-minute candle, if we close below it, I would treat this 15-minute inefficiency as a gap that, you know, we trade into and we rebalance it. But if we close above this purple line, which is the purple line is essentially the fair value, the second fair value gaps candles high. If we close above it, I would treat this inefficiency as a breakaway gap. So it just kind of depends on how we close. And I'll just give it some time and see where we close here. 3 minutes left. If we can create a bullish 15-minute closure here, that 15-minute high is the same high as the 30-minute high and the hourly high, meaning we should complete the hourly objective within the next 15 minutes, right? If you guys want to rewind that, you guys could. That's essentially called scope. Scope allows you to understand when a specific objective should be completed. There's that. Have 2 minutes left, roughly. All right. Oh, let's see. Let's just see if there's any fair value gaps here on the 15-minute time frame. That is suggesting of higher prices. Oh. And all right, so let's see. So there is that 1 minute fair value gap that we've been trading above right here. So it does favor higher prices. It supports the idea of higher prices. So let's see where we close. Preferably, I want to see us close above this 15-minute high. So this 15-minute candle is high here, and I kind of want to see us close below this fair value gap, or not fair value gap, but that high. I want to close below it so I can actually treat this inefficiency as a gap that gets rebalanced. But if we don't, then I can't really do anything about it. And the higher time frame objective here for this trade would be for us to retrace back into the premium, right? It looks like we're probably not going to be given that opportunity, and we're not. So we just traded back into the premium there. The objective here coming to the morning still is for us to take out the 15-minute high, which we just did. But yeah, so notice how we traded back into the premium of that 4-hour dealing range that I just showed you guys. So notice that blue line, we traded above it, and we did end up taking out the 15-minute high as well. So the 15-minute high, same high as the hourly high. Let's see if we do end up taking out the 4-hour high as well. We did. We ended up taking out the 4-hour high. We are now rebalancing a inefficiency here. Just something that I do want to point out. So now, coming into this morning, my objectives has already been met. Everything that I'm kind of looking for has already been basically accomplished. So I don't want to force anything here now. I just wait and see and not force anything. Yeah, let's I go over some of the pros and cons here with you guys. And alright, so some of the pros and cons here from, I guess, previous week is taking consistent models, right? Every single trade that I take, I should be able to identify what my higher time frame objective, what my model, and what my entry pattern is going to be. If I can identify all three of those components in every single one of my trades, it will keep the trades that I take consistent. It will keep me, in alignment with my strategy. Give me 1 second. Alright, sorry about that. I am back. But yeah, so taking consistent models is a value of mine, right? Is something that I really do value a lot, right? Consistency is key. It doesn't matter if if you take a winning trade and you didn't follow your strategy. It just completely negates the whole idea that you took a winning trade. If you took a winning trade and you negated and you kind of just disregarded your strategy, I wouldn't applaud that, right? And second, just being extra patient here coming into this week. I know that as last week, I had spring break. I went on 2 trips, and I wasn't really focused on looking at the markets, right? So I know that coming into this week, I might be a little bit, I wouldn't say rusty, but I'm not, completely, in tune with things. Not yet. So, I would use this week as kind of like a refresher, kind of just, start building up those habits again, building up that routine, and just not spending all of my energy on forcing a trade to happen, on, you know, um, spending all of my energy just trying to look for a trade. I know that I don't know where my emotions are quite yet, right? So spending this week trying to just fill out where I'm at is kind of like what I want to do this week. Third, like I said, allowing this week to be a rebounding. So it just basically just kind of just going back to what I stated in my second point, allowing myself to use this week as a rebound week and just using it to spend majority of my energy on, rebuilding and, getting back to that consistent routine, that daily routine. And just, having a routine just builds that consistency, right? You know, whenever you first start something, right, you get that, you get that first initial stage of like dopamine and just motivation. But motivation isn't something that is like, it's good, but it's not something that you can depend on for a long period of time. You can use that initially, but the thing that's going to separate you from someone that succeeds in actually what they do, like, let's just compare two guys that have the same passions, right? But one guy solely depends on the motivation part. But the other guy, he kind of goes off from motivation just depends on pure discipline and consistency, right? The guy that shows up every single day, no matter no matter how he's feeling, is going to accomplish way more than the guy that, that just simply depends on motivation. And if he doesn't feel motivated one day, he'll just do something else, right? That consistency is what's going to really drive work. So, how hard or how badly do you want it, right? And some things I can work on coming into this week, not forcing anything. I don't want to be, forcing a trade to happen. I don't want to, manipulate the prices in a way where it suits me. Ideally, I do want to just sit on my hands. If the trade comes, the trade comes. If it doesn't, it doesn't. Just, simply just submit to the process, right? And second, every single day, just journal something new that I have learned. And from yesterday, just so that I could, just actually say out what I learned yesterday. Here it is. So yesterday, I learned about retail sales, right? Not retail sales, but as in the study and the numerical value that it provides, the understanding that it provides, right? And this is retail sales is given by, you can check it on Forex Factory or any just economic news calendar or whatever that you use. So retail sales measures consumers spending on goods and services on a retail level. So if retail sales are increasing, that means consumers, you can have the idea that consumer sentiment is, they are buying, they're confident, you can assume a lot of things. There's a lot of underlying assumptions that you can make with retail sales numbers. It reflects the overall strength of consumers' demand, which drives economic growth. So the United States economy is really it is driven by consuming, right? Consumers are essentially the backbone of the United States economy. So, this number here is something that you do want to pay attention to, in tandem with other, components as well, like CPI, which is essentially inflation or a measure of inflation. There's consumer confidence, which is kind of like not the numbers wise of CPI, but it's kind of where like it's more psychological. It deals more with psychological feeling towards inflation. And just two terms that I do want to mention here from yesterday is that rate hikes are essentially another term for raising federal funds rates. Rate cuts are essentially lowering the federal fund rates. Federal funds rate is essentially the interest rate that the banks charges each other for overnight loans, right? So the federal funds, the feds, they require commercial banks and just all banks in general to have a specific amount of money in their, I guess, in their safe, quote unquote safe. And so to meet that requirement, some banks will loan to other banks overnight. And the federal fund rates is essentially the interest rates that is charged by banks to other banks to actually be able to loan that overnight fee. And if the federal funds rate is raised, right, that means loaning is going to cost, or not loaning, but borrowing is going to cost more for the banks who's ever borrowing. So that bank that is borrowing would increase their interest rates on loans that they gave out to the consumers to be able to kind of like cancel out the fee that they have to pay for, I guess, the bank that loans them money. So it's a whole, there's a lot more to it. I'm not well versed in it yet. So it's just something that I'm kind of dabbling on, and just just learning more and more each day about it. And the last thing that I do want to point out is that there is a study that shows that inflation could just simply be like the psychological feeling of consumers, which is why consumer sentiment is a good I guess an indicator to really take a look at, right? Inflation psychology is when the consumers believes that they are in a inflated economy due to not due to any it could be due to news or just simply their feelings, right? It's not anything that's based on numbers wise, but the psychological side, like I said, it's beliefs and feelings. And consumers might just not want to buy anything because they feel as if there's inflation, but it has to be backed by actual numbers, which is kind of where you would kind of depend on CPI. And there's another one, I think it's called PCE. I'm not entirely too sure, but like I said, just something I need to continue to learn, right? Yeah. So I mean, some improvements here that I could make this week: taking those consistent trades, right? Every single trade that I take, I should be able to identify a higher time frame objective, a model, and a entry pattern. I'll go over a trade here with you guys actually right after this. But being extra patient, allowing myself actually to just slowly regroup, build up those good habits and routines, and not force anything. Third, learn something new every single day. If there's something that really sticks with you, you want to journal that, or I would journal that, and yeah, it just helps you retain the information whenever you journal it. So, and just a quote that you want to just keep in mind is knowledge is something that cannot be taken away from you. I believe a man that is knowledgeable could recreate, his wealth, whatever. So let's go over a trade here from, this was February 25th, 2025. So in this trade here, I can kind of see what my higher time frame objective is already. So I'm going to draw your guys' attention to the hourly candle here, right? So this hourly candle, bearish hourly candle, right? It's very objective. It's in a bearish hourly candle. The way that we closed below this hourly low here means that this fair value gap is going to be treated as a breakaway gap. So I already have a kind of like a macro view of lower prices already, simply based off of the hourly candle. So this very next hourly candle here, I want to see us take out the hourly low, treat this inefficiency as a breakaway gap, and I would really favor I would be favoring lower prices here coming into the next hour. So now that I have my higher time frame objective in mind, it's not confirmed that I'm going to take a trade. I just have just a very broad idea of what I want to see next. So coming into the next hour, I would wait and see how we close here on 15-minute candles and 30-minute candles to really confirm a bias. So the model that I use to align myself with the hourly bearish order flow would be this 30-minute candle. So this 30-minute candle, what is it suggesting? Suggesting lower prices, right? I want to see us take out this 30-minute low. What happens, or what should happen after we take out the 30-minute low? Well, we should expand towards the hourly low, right? Because those two time frames, keep in mind that this 30-minute candle is suggesting lower prices. This hourly candle here suggesting lower prices. So those two time frames are in alignment with one another. And there is this idea called scope. I do remember that I briefly mentioned it with you guys, where notice how this 15-minute candle's low here is the same low as the 30-minute low. What does that mean? This could be translated to, hey, we're going to complete this 30-minute objective within the next 15 minutes. So base your entry pattern not on the 30-minute time frame, but on the 15-minute time frame. So zooming in just a little bit, I went from the hourly higher time frame objective. I went from that time frame. I went onto the 15-minute / 30-minute model. So now my entry pattern would be on the could be on the sub 5-minute time frames, because my model is on the 15-minute time frame. So there's a 1-minute fair value gap, 2-minute fair value gap, 3-minute fair value gap, 4-minute fair value gap, 5-minute fair value gap. What time frames would offer a fair value gap like that? And so on the 2-minute time frame, you guys will see that there's a 2-minute fair value gap that supports lower prices, right? It supports the idea that we're going to take out the 15-minute low and the hourly low. So we trade up into this inefficiency, we take out the 15-minute low, and then we take out the hourly low. There's the trade. Very simple trade. Yeah, just some key things about this trade is that this would be considered a expansion trade, right? Where we're expanding towards the hourly low after we take out the 15-minute low. So notice how the notice how here it states hourly low, and there's a separate, completely different low here, 15-minute low. So those two lows are completely different, but those two time frames are suggesting the same idea, which is lower prices. And yeah, that's going to wrap it up for today's live stream. Hopefully you guys were able to find some insight from that. I went over, the morning objective, which was higher prices. I went over what I wanted to see during the day, which is higher prices. And yeah, thank